Hi everyone, and welcome back to the channel. Today, we're digging into the latest price action surrounding Opendoor Technologies. As of today's close, the stock has slid back to just above the $2 mark. For some, this is disappointing. After all, just days ago we saw Opendoor explode higher, ripping past 260 in an impressive momentum-driven rally. But now, we've seen most of those gains evaporate. So, what happened? Is this a sign the rally was a fluke? Are the bears right? Or is this a necessary cooldown, and possibly a setup for another run higher? Let's break it all down. We'll look at the actual market drivers, address some speculative fear-mongering in the media, and importantly, we'll zoom out and revisit the broader picture that still makes me bullish. First things first, yes, Opendoor has pulled back sharply. After peaking recently, the stock lost ground steadily and is now hovering near a crucial psychological support level of around $2. But here's the reality, this isn't surprising. In fact, for those of us who've been through short squeezes or momentum trades before, this is almost textbook behavior. Let's remember, Opendoor rallied well over 100% in just a few sessions. That kind of move almost always triggers profit-taking. Short-term traders, especially those using leverage or playing options, take money off the table once the excitement plateaus. When buying slows, momentum fades, and what happens? Prices drop. That's exactly what we've seen here. The recent decline isn't driven by new fundamental weaknesses. It's a sentiment reset, not a structural collapse. Now, unfortunately, when a stock loses steam like this, the fear narrative moves in. And that's where things get a little murky. Over the past day or two, we've seen bearish voices in financial media and on social media begin circulating a rumor that Opendoor might be preparing to issue new shares, basically, dilute current shareholders to raise more capital. Let's address this directly. At the time of this recording, there is no SEC filing, no company statement, and no credible report that Opendoor is preparing an equity offering. So where is this idea coming from? It's coming from a misunderstanding, or misrepresentation, of something called a shelf registration. Opendoor, like many public companies, has a shelf registration on file with the SEC. It allows the company to issue shares in the future if it chooses to. But that's the key phrase, if it chooses to. A shelf registration is not a signal that dilution is coming, just that the company wants flexibility, should the need arise. This is standard practice. And the timing of this speculation, right as the stock is cooling off, is a bit too convenient. It almost feels like this dilution rumor is being amplified to scare retail investors, push the price down further, and potentially help certain short positions get out unscathed. But here's what we know. Earlier this year, Opendoor already raised funds, through convertible debt, not equity. This allowed the company to access capital without immediate dilution to common shareholders. And if they truly wanted to raise equity, the logical time would have been last week, when the stock was surging above 260, not now, when it's under pressure again. So in my view, this dilution narrative is speculative at best, and manipulative at worst. Now, with that addressed, let's revisit where we're at from a technical and strategic perspective. The stock is currently sitting just above $2, a key psychological and historical level. It acted as resistance on the way up, and now, we're testing it as support. If this zone holds, it could serve as a foundation for another move higher, especially if volume returns. We've seen it before, Opendoor tends to consolidate in tight ranges before making big moves. This could be one of those moments. But beyond the chart, let's talk about why the bullish case is still alive, and in my opinion, even strengthening. First, the reverse stock split vote. This is still a huge point that I think hasn't been fully appreciated. Opendoor's board postponed the vote on the proposed reverse stock split. And not only that, they made it clear that the reverse split would only be used if absolutely necessary. That's a quiet but powerful show of confidence. When a company feels its share price is unsustainably low or in danger of delisting, it acts quickly to reverse split. But Opendoor held off. That tells me the board believes the share price can stay above compliance levels organically, without artificial adjustment. It also keeps the pressure on short sellers. A reverse split can often reset short positions, or create new borrow opportunities. By delaying that vote, Opendoor is essentially keeping the door open, pun intended, for more squeeze potential. Second, earnings are coming. Earnings are expected in August, and that's going to be a big test. If Opendoor can show improvements in unit economics, higher conversion on inventory, narrowed net losses, or any kind of path towards sustained profitability, then the stock has room to re-rate, possibly quickly. Even a marginally better-than-expected report could shift sentiment dramatically. Because let's face it, expectations are still low. That creates asymmetric upside for bulls. Third, interest rates. The macro environment is becoming more favorable. The Federal Reserve has indicated that rate cuts could be coming later this year, possibly as soon as September. And for Opendoor, that matters a lot. Their business depends on housing liquidity. When rates are high, buyers and sellers freeze. But if rates drop, even modestly, activity picks up, and that means more homes listed, more homes sold, and more margin to play with. Even one rate cut could materially improve their outlook. Combine that with a decent earnings report, and the whole narrative shifts. So, what's the verdict? Yes, we've dropped back to $2. Yes, the momentum has cooled. But the structure of this setup remains intact. The board has delayed the reverse split, signaling faith in the stock price. There is no confirmed equity offering, despite what rumor-based headlines are saying. Short interest is still elevated. And we have two major catalysts ahead, earnings in August, and potential rate cuts after that. So the big question is this the end of the rally, or the setup for something bigger? In my opinion, we're in a reset phase, not a collapse. Strong hands are staying in. Weak hands are being shaken out. And if support around $2 holds, this could be exactly the kind of base that bulls build from. I'll be watching the volume closely, watching for any bounce signals, and of course, watching for any new developments around filings, earnings guidance, or macro updates. Let me know in the comments. Are you holding through the dip? Are you using this pullback as a buying opportunity? Or are you sitting on the sidelines and waiting for more confirmation? As always, thank you for watching. Be sure to like, subscribe, and tap that bell for more real-time updates on Opendoor and other high-potential trades. See you in the next one.